10-year note yields nudged higher in a very narrow trading range. Today we saw yields get as high as 384 amidst a 380 to 384 range. So only 4 basis points, not a huge calendar day for economic data. We did have a few auctions, a 5-year and a 2-year note floating rate note auction. Both came in as expected, modest demand, and did not really move the market. Ultimately, the market, which is always forward-looking, looking ahead to Friday's PCE data, as well as next week's non-farm payroll, both which may shift expectations for next month's FOMC meeting, which right now continues to price in about 30% odds that they will cut 50 basis points. But we'll have to wait and see. Obviously, those numbers will play a big role in that. Again, seeing 10-year note yields nudge higher today, getting up to 384, up slightly on the session. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. And while we do have some key data points later this week, we do see volatility continuing to nudge higher, not in a huge way, still holding within that 6-week range, but clearly seeing a modest uptick as yields have been upticking as well this week. Lastly, let's talk about what we have tomorrow. Tomorrow is Thursday, which means we get our in-the-moment look at the job market via the claims number. We also get pending home sales. We get a GDP revision and a 7-year auction to roll out or finish out the week of auctions. Earlier in the week, we had a 2- and 5-year and then a 2-year note floating rate. Thursday brings the end of this week's auctions via the 7-year. So midweek yields continue to creep higher, although in a very quiet way, in a very narrow range, seeing a 4 basis point trading range, yields slightly higher to 384 before closing out the session ahead of tomorrow's claims, GDP revision, pending home sales, and a 7-year auction.